Thank you very much for joining me here today. I'm Don Ma. To start off, on Monday, the governor of Texas created a new law that's aimed at punishing those who come into Texas illegally. Here's more.
On Monday, Texas Governor Greg Abbott made it a state crime to enter Texas illegally. The system is strained. U.S. Border Patrol Chief Jason Owens tells CNN border authorities apprehended about 192,000 migrants between ports of entry last month. Tucson Sector Chief Patrol Agent says more than 37,000 migrants were stopped there in the first 2 weeks of December.
Our border has been erased. We have no border any longer.
While Republican presidential candidates blame President Biden for record-high migrant apprehensions, White House and Senate negotiators are trying to work out a border deal. Without that, aid to Ukraine, Israel, and more is stalled. Senate Minority Leader Mitch McConnell says there's progress, but it will take time.
We cannot afford to get this wrong.
Monday, U.S. Customs and Border Protection, which says it had seen a surge in migrants moving by train, temporarily halted railway operations at international crossing bridges in Eagle Pass and El Paso. The Association of American Railroads called for a policy reversal, saying in a statement, every day the border remains closed unleashes a cascade of delay on both sides of the border. Like so much on the border, multiple sides and no easy middle.
Is the U.S. losing manufacturing to foreign companies? Recently, an American steel company who used to be the largest corporation in the world has been sold to a Japanese company who was the highest bidder. U.S. Steel has struck a deal with Japan's Nippon Steel for nearly $15 billion. Japan's largest steel maker has agreed to pay $55 per share to take over U.S. Steel. As part of the deal, U.S. Steel's operations will keep its name and its Pittsburgh headquarters, and the United Steelworkers Union, as well, has attacked the deal and vowed to block it. It had said it would only support an offer from another unionized American steel company. In a statement, U.S. Steel said that all union contracts will remain in place and that Nippon is committed to maintaining these relationships. Meanwhile, China's economy seems like was supposed to come back to life after the end of lockdowns, but instead showed signs of sputtering. That has some economists asking if it's time Beijing accepted that the days of super speed growth are gone for good. Here's a look back at China in 2023.
Was this the year that China started to look more like Japan? 12 months of sputtering growth has some economists asking the question. After lockdowns ended, Chinese shoppers were supposed to go on a spending spree. Instead, they chose to save for a rainy day. Foreign investment was meant to resume, but cash actually flowed out. And the property market was supposed to stabilise, but instead sank deeper into crisis. Such factors led to an uneven post-health crisis economic recovery, even if the economy is on track to hit its growth target for the year of about 5%. Reuters Deputy Hong Kong Bureau Chief Marius Zaharia says that all raised some big questions.
Voices that compare China today with Japan in the 1990s have grown louder this year. The core of the problem, its economic model, which has done miracles for many decades since it was adopted in the 1980s. But according to some economists, it stopped working so well about a decade ago when it began producing more debt than growth.
Japan has long since accepted it will never return to the roaring growth rates it once knew. With its population now shrinking and aging, some economists think that's China's fate too. Beijing officials are having none of it.
中国经济长期向好的基本面没有也不会改变。
Policymakers have vowed to shift the economy away from its reliance on property. This year they pledged to boost consumption by households instead. But analysts say there is still no clear roadmap for change. Any change could stoke resentment. Youth unemployment has already soared, and many Chinese have seen their wages cut. Falling property prices are making homeowners feel poor. And tackling the vast debts built up by real estate firms and local governments will mean asking who pays the bill. Households, firms, banks, someone else? It's not clear. Marius Zaharia again.
Reform is always difficult anywhere, but also in China, because it runs into considerations of social stability, and it runs into very tough decisions to be made as to which institutions or which sectors of the economy will bear the cost for these policies.
For now, government advisors are still talking about targeting 5% growth again next year. Looking across the sea to Japan, some economists think that might be hard to sustain.
And Chinese banks are getting ready to sell bad loans at a record number. This is as more and more customers default on payments. This week alone, 6 banks plan to issue $211 million worth of asset-backed securities based on bad loans. This is according to sales documents reviewed by Reuters. Data shows that issuing security backed by non-performing loans is set to jump 40% from a year ago. That would be a record number. The increased sales of bad loans underscores the challenges banks are struggling with. That's from a real estate crisis and from local debt to a weak post-COVID economic recovery. And according to a Chinese ratings agency, Chinese banks have sold roughly $6 billion of bond-like securities based on bad loans so far this year. That's up from last year at the highest on record. And billions of American investment could be on pace to be extracted from the Chinese economy. NTD's Sean Marshall has more information.
$65 billion of U.S. capital is predicted to leave the Chinese economy in 2024, according to a report released by the Institute of International Finance. That's due to declining trust from investors and in addition to geopolitical risks. Chinese bonds have had consistent outflows from foreign investors since the beginning of 2023. Despite the U.S. Federal Reserve's halted rate hikes, the wide U.S. dollar-yuan yield spread will likely persist due to the People's Bank of China's dovish stance. So what does that mean in simple terms? Basically, American banks will be offering higher interest returns than Chinese banks. The difference in the amount of American and Chinese interest returns is the yield spread. Since the U.S. Federal Reserve started increasing its interest rates in March last year, there have been a big difference in interest rates between China and the U.S. This has led to more people taking their money out of assets in Chinese money. Since the beginning of the year, the Chinese yuan has weakened against the U.S. dollar, losing up to 6.2%. It dropped past 7.3% in September and October. In November, foreign investors withdrew $3.7 billion from Chinese stocks and bonds, even as money started flowing back into emerging markets, according to IIF data. Sean Marshall, NTD News.
U.S. stocks advanced on Monday as market participants parsed mounting expectations of interest rate cuts from the U.S. Federal Reserve in the coming year and looked ahead to a week of crucial economic data. Here's a recap of markets.
A broad but modest rally lifted most U.S. stocks on Monday. Wall Street continues to build on 7 straight weeks of gains, fueled by optimism of interest rate cuts by the Federal Reserve in 2024. The Dow ended flat, while the S&P 500 added nearly 0.5%, and the Nasdaq rose 0.6. Scharf Investments lead portfolio manager Brian Crowes says he thinks stocks will experience smooth sailing in the near term, but he remains concerned about what could happen in 2024.
We think things are going to be constructive for a while. Next year, as potentially earnings disappoint, if we have a recession, and if the higher oil prices coupled with ongoing geopolitical risk could create a problem for investors. But at least right now, we think investors are going to continue to push stocks higher.
Fed presidents tried to rein in the enthusiasm Monday, with Chicago Fed President Austin Goolsbee warning that the central bank has not pre-committed to cutting interest rates anytime soon. And Cleveland Fed President Loretta Mester said financial markets had gotten a little bit ahead of the central bank with respect to the timing and extent of rate cuts. Stocks on the move included shares of U.S. Steel, which surged 26% after Japan's Nippon Steel agreed to buy the company for nearly $15 billion. And shares of VF Corp fell 8%, following its announcement that unauthorized activity on its computer system affected the Vans sneaker maker's ability to fulfill some orders.
The head of UBS has expressed skepticism about inflation being under control, and this was during an interview with the newspaper. Chief Executive Sergio Ermati told the newspaper that he's not convinced central banks have inflation under control. He noted that the trend seemed favorable, but said, "We must see if it continues." Last week, the chair of the U.S. Federal Reserve signaled that interest rate hikes could be over and lower rates could be on the way. But central banks around the world have stuck to their plans to keep policy tight into next year. Sources told Reuters that European central banks were still seeing how inflation pans out before making any decisions. Apple said it would pause sales of its Series 9 and Ultra 2 smartwatches in the United States from this week. This is as it deals with the patent dispute over the technology that enables the blood oxygen feature on the devices. Here are the details.
Apple has been forced to halt sales of some smartwatches in the US. The tech giant said Monday that the move affected its top-end Series 9 and Ultra 2 models. It comes amid a patent dispute over technology that allows the watches to measure blood oxygen levels. US watchdogs have said that violates rights belonging to medical technology firm Masimo. In October, the US International Trade Commission said it could bar Apple from importing the watches as a result. That decision is now under review by President Joe Biden. If he doesn't overturn it, the ban will go into effect on December 26th. Apple says it's taking steps to comply already, with the affected watches to go off sale before Christmas. Lower-priced models that don't feature the blood oxygen sensor aren't affected, and all versions will remain available outside the US. Massimo boss Joe Chiani has said he's open to a deal. In October, he told CNBC that he was ready to negotiate with Apple. The iPhone maker says Massimo's moves are just a maneuver to clear a space in the market for its own competing smartwatch.
Homelessness in the U.S. hit a record high this year. This is according to a new report from the U.S. Department of Housing and Urban Development. The 2023 annual homeless assessment report shows more than 650,000 people experiencing homelessness on a single night in January. This is a 12% increase from the previous year, and it's also the highest number of people experiencing homelessness since reporting began in 2007. The data also shows that families with children made up 30% of those who were homeless, which is a 16% increase over the previous year. Alphabet's Google has agreed to pay $700 million and to allow for greater competition in its Play App Store. This is according to the terms of an antitrust settlement with U.S. states and consumers, which was disclosed on Monday in a San Francisco federal court. Here's the report.
People in the US could be in line for a payout from Google over its App Store. The tech giant has agreed to pay $700 million to settle an antitrust case brought by states and consumers. Eligible users will get at least $2 each, and maybe more depending on how much they used the Play Store. Google was accused of overcharging consumers through unlawful restrictions on the distribution of apps on Android devices. It was also accused of imposing unnecessary fees on in-app transactions. The firm hasn't admitted any wrongdoing as part of the settlement. Utah and other states first announced the deal in September, but the terms were kept secret pending the outcome of a related suit brought by the maker of the Fortnite video game. A California jury last week ruled against Google in that case too. The company says it is now working to make it easier for consumers to use alternative methods for in-app purchases. As part of the settlement, it will also make it simpler for people to download apps directly from developers. Lawyers for the states said the agreement would bring meaningful relief for consumers.
Southwest Airlines has reached a $140 million settlement over last year's holiday travel nightmare. That's when thousands of flights were canceled during December 2022, leaving more than 2 million people stranded.
Southwest Airlines has agreed to pay a record-setting $140 million civil penalty. The US government made the announcement Monday. It's over a holiday meltdown from December last year, which led to 16,900 flight cancellations and left 2 million passengers stranded. The settlement includes a $35 million cash fine and a 3-year mandate to provide $90 million in travel vouchers of $75 or more for passengers delayed at least 3 hours getting to final destinations due to an airline-caused issue or cancellation. The delay compensation is a first of its kind in the US and due to start in April. Last year's travel chaos was caused by a massive winter storm and led to people missing funerals or long-awaited holiday gatherings. The storm cost Southwest more than $1 billion, but it's since made technology and consumer service upgrades. Southwest did not admit to wrongdoing, but agreed to the settlement to avoid litigation. However, regulators found Southwest broke consumer protection laws. They said the airline failed to provide adequate customer service assistance via its call centre to hundreds of thousands of customers. It also argued Southwest failed to give prompt flight status notifications to more than 1 million passengers.
A U.S. court entered an order against crypto exchange Binance and its former CEO Changpeng Zhao, approving billions of dollars in fines for money laundering following a case brought by the U.S. Commodity Futures Trading Commission. Here's more.
Binance must pay billions of dollars in fines. That was the order from a US court on Monday against the crypto exchange and ex-CEO Changpeng Zhao. It approved the fines for money laundering following a case brought by the US Commodity Futures Trading Commission. Binance must give $2.7 billion to the CFTC, while Zhao is ordered to pay $150 million. He stepped down in November and pleaded guilty to breaking US anti-money laundering laws. It was part of a settlement to resolve a years-long investigation into the world's largest crypto exchange. At the time, Binance said the resolutions accepted the company's responsibility for historical criminal compliance violations. Authorities said Binance broke US anti-money laundering and sanctions laws. It also failed to report more than 100,000 suspicious transactions with organizations the US described as terrorist groups. Investigators added the exchange didn't report transactions with websites devoted to selling child sexual abuse material. And it was one of the largest recipients of ransomware proceeds.
Elon Musk says oil and gas should not be demonized. Electric car maker Tesla founder said that the environmental movement has gone too far, which is causing people to lose faith in the future. He made the remarks during a political festival in Italy. Musk does consider himself an environmentalist. He said it's important to industries for reducing carbon emissions in the long run to preserve the planet. But until then, he says that oil and gas should not be demonized. And could lower borrowing costs be coming in 2024? Bank of America forecasts 4 rate cuts coming from the U.S. Federal Reserve next year. Is that likely? Earlier, I spoke to a market analyst. And now joining us here is Joseph Trevisani, senior analyst at FX Street. So Joseph, 4 rate cuts next year from the U.S. Federal Reserve, likely or not?
Well, that seems to be what the Fed thinks too, because they've reduced in their projections, which came out last week for December, they reduced the end of the year 2024 to 4.6% from 5.5 now. So they have, for their own projections, are predicting 4 rate cuts. So it's not really a large reach for anybody who agrees with that.
By the end of 2024, we're going to get 4 25 basis point rate cuts, bringing down the Fed funds rate to around 4%.
Well, around 4.6% is what they're projecting at the end of the year. The question is, I think there are really twofold questions. One, inflation has come off, but it's now seemed to stabilize around 3.2%, right around there. The more important question is, what is the economy doing? If the economy continues on its current path, it's hard to see how there's any reason to cut rates with inflation still above their target. So even though the Fed seems to be predicting that, I have questions whether they'll actually do it.
So then if you think that there may not be a good enough reason to cut rates, then why do Fed officials, a lot of them in fact, are projecting rate cuts next year?
That's a very good question. The only reason really can be that they expect the economy to deteriorate considerably from where it is now. Now, that kind of projection or that kind of assumption is based on the historical factors that when the Fed raises rates as much as they did and have, you get a reaction in the economy. The economy slows down. The fact is we haven't seen it really so far, but that's what they're basing it on because there isn't anything else.
So do you think the Fed knows something that the broader market doesn't?
I do not think the Fed knows something that the broader market doesn't. I think they are going with historical precedent, which generally works. But don't forget, the Fed has been quite wrong recently and before that, going back really to the financial crisis, about inflation. So the Fed's prognostication skills are really not any better than anyone else's. You could make a case that they're worse because they suffer from the bias of wanting to get to a particular target.
So the Federal Reserve sort of hinting at rate cuts and hinting at potentially no more rate hikes. I think that took some by surprise. Wouldn't it be reasonable to think that it's also possible that they may cut rates, surprising some next year?
It is definitely possible. I mean, the Fed doesn't like to surprise markets, and we know that. It really upsets everything. Yet, they are making a prediction here that the credit markets have been in front of by about 2 months. So they're going along with what the credit markets seem to think. Again, I don't really think that the Fed is as confident about this coming slowdown as these rate predictions predict.
All right, thank you very much today for your insight. Joseph Trevisani, Senior Analyst, FX Street.
You're welcome. Thank you for having me.